Hello and welcome to another episode of Spy Trader. I'm your host, Chuck Doe, and it's 6 p.m. on July 17th, 2024. We've got a jam-packed episode today with major movements and insights in the S&P 500. If you're ready to spy on some trading opportunities, let's dive right in. First up, let's talk about the rare Whaley Breadth Thrust Indicator that has been triggered. This indicator shows a significant rise in participation among the non-megacap tech components of the S&P 500. Historically, this indicator has a 100% success rate 1 year out, with an average return of 23%. Can you say bullish? It has only triggered 15 times since 1950, so this isn't something you see every day. So what's going on? The S&P 500 rally is not just being pushed by the tech giants, but by a broad range of stocks, which is a good sign for continued upward momentum. Factors like a favorable CPI report for June, potential interest rate cuts from the Federal Reserve, and the potential Trump election win in November are all contributing to this bullish signal. In tech news, we've seen declines in companies like Nvidia, AMD, and Broadcom. With the Biden administration considering tougher restrictions on chip exports to China, semiconductor stocks are feeling the heat. Also, the Fed's Beige Book showed slight economic growth and cooling inflation, which is leading to talks of possible rate cuts. TSMC, a major player in the semiconductor world, reported a Q2 profit forecast jump of 30%, driven by high demand for its advanced chips used in AI applications. But it's not all smooth sailing. TSMC stock took a hit after Trump's comments on Taiwan's chip business, sliding around 8%. As TSMC plans its massive expansion in Arizona, competitors like Intel and Samsung are also stepping up their game. Now let's brighten the mood with a joke. Why was the math book sad? Too many problems. Looking at the dollar, it's at its lowest level in nearly 2 months, while the yen has strengthened significantly due to speculation of potential intervention by Japanese authorities. This strengthens the broader narrative of market volatility driven by geopolitical factors. All right, let's break down these insights and move into some trading recommendations. Given the rare bullish signal from the Whaley Breadth Thrust Indicator and its flawless historical track record, it seems wise to stay invested in the broader S&P 500 and look for potential upticks over the coming year. However, considering the recent pressures on tech and semiconductor stocks, be cautious with names like Nvidia, AMD, and Broadcom. These stocks may see more instability as the geopolitical chip saga unfolds. For those looking into tech, diversifying your investments outside of just semiconductor stocks could provide some safety and capture upside potential from other tech sectors benefiting from the S&P 500's broad participation. Regional bank stocks have been rallying following hints of potential rate cuts. Stocks like PNC and US Bancorp have surged recently, and there might be more room for growth if rate cuts materialize. Keep a close watch on mid-sized lenders who could benefit from these anticipated cuts. For a touch of real estate, increased housing market inventory and easing competition could play out favorably for home construction companies within the S&P 500. Real estate-related stocks may benefit from more balanced market conditions and the eventual stabilization of housing prices. While geopolitical factors, including the impact of the Russia-Ukraine situation and U.S.-China relations, cannot be ignored, diversification remains key. Having a balanced portfolio across various sectors can help mitigate these risks. That's all for today's episode of Spy Trader. Keep your eyes on the market, and don't forget to tune in every few hours for the latest updates and insights. Until next time, I'm Chuck Doe, saying happy trading, and remember, watch those indicators. They might just spy some gains for you.